Hi, it's Lori Richardson with Cornerstone Home Lending. On Monday, July 11th, just wanted to give you a quick look at the markets and the week ahead. The bottom line right now, as you guys are all hearing, is that we are still feeling the initial impact of Brexit. Last week, investors continued to seek safety of U.S. bonds following the Brexit vote, and this movement offset much stronger than anticipated U.S. economic news, and we literally saw mortgage interest rates end the week lower than they've been in years. So this week is somewhat of a quiet news week, but we got a lot of jobs data last week, and we're going to dig into that today. So let's talk about jobs data. If you remember back in May, we got a very disappointing employment report, and it was actually revised even lower, showing that there were only 11,000 jobs created in the U.S. in the month of May. The June numbers were reported last week, and it was a great reminder that we should never just look at one month as indication of a trend. June expectations, if you remember a couple weeks ago, we reported that the expectations for the number of jobs to be created in June in the U.S. was between 160 and 180,000 jobs. Last week's report revealed a whopping 287,000 jobs added in the month of June. That is the highest level we have seen since October of 2015, so kind of a big number there. An important side note is that unemployment actually went up in the month of June from 4.7% to 4.9%, but keep in mind that's actually a good sign because it shows us that more people are more confident about finding jobs and they're actually re-entering the workforce. Average hourly earnings, which indicates wage growth, were 2.6% higher than a year ago. The thing I want to note here is that this was the fastest annual increase that we have seen since 2009. Now, you might be asking yourself, isn't it typical that when we see stronger than expected jobs data, isn't that bad news for mortgage interest rates? And the answer is generally yes. After last week's data, you'll notice that we saw the opposite, and here's one of the reasons why. We're still feeling the effects of the Brexit vote. Global investors are still seeking safer assets, which means money is coming out of some of the markets overseas and into mortgage-backed securities, which is helping rates decrease and pushing rates in the U.S. near record lows. So reports coming out this week, again, kind of a quiet week. Tuesday will bring a Treasury auction. Wednesday we will see mortgage applications and a 30-year bond auction. Thursday we will see initial jobless claims and the producer price index. And then Friday we'll see some inflation numbers, consumer price index. We will see retail sales and the Empire State Manufacturing Survey. As far as rates, again, we're sitting at some of the best levels that we've seen in years. Conventional conforming rates are literally in the mid to slightly high 3% range. 15-year fixed today is actually below 3% on a conventional conforming. FHA is sitting in the low 3s and jumbos in the high 3s, possibly breaking into the low 4s. So again, rates are great. If there's anything we can do for you, please call. Make it a great day.